Hello, good day. Today is the 9th of March 2009, and here we are again to present to you the Forexserve weekly update. This week we are looking at a couple of things which could pan out on the basis of risk remission and people taking slightly more risk. Because the fear was last week that the US employment data would be far too bad, but it was somewhere close to the expectation, and that helped the markets on Friday. And we saw a kind of a relief rally in the euro and GBP, and the dollar was somewhat sold off. We see this week that process could continue, but of course for that to happen there has to be some return to normalcy in the European markets. The stocks that have been badgered badly over the last couple of weeks should look at reviving in the European sector and even in the United States. We have seen the governments of the countries of the major economies taking the maximum amount of measures they can in trying to allay the fears of the market and provide liquidity, provide some kind of oversight of the new ways that they're looking at reviving the economies. All that having been done, even then the markets are not enthused yet. I mean, this of course a kind of a crisis which has no precedent, and what the roadmap is, obviously it cannot be understood even now. But what we can glean from all this is that there could be a window of opportunity for dollar sellers, because dollar buyers have been on top for reasons we have described so many times, but that might yet change. The charts later on would bring to you kind of a visual image of what we are trying to say. And I feel that the markets would also keep in mind the fact that the finance ministers are meeting in London this week in preparation for summit in April, where people are expecting some kind of a solid roadmap for a world market recovery to take place. Having said that, we would now go into the charting segment. Thank you very much. Today we look at the euro chart to start with, and we see in the weekly that there has been a hammer formation at the bottom of the range, and it has formed off the lows as we are showing here. And the feeling that we are getting here is that if this is A wave, then this is wave 1 of B, this is 2 of B, and wave 3 of B should ideally target this region that I am pointing out. So we're still in with the belief that this could be a base for the euro for it to move higher. But of course, a close below this mark on a weekly basis or a couple of days would mean that the euro is trending lower. We look at gold now, and we find that this long up move since $670, $680 right up to the 1,000+ mark has seen a top, and there has been an effort to the downside, and it would mean that it could head lower. So we feel that if you look at this formation, is coming up to become something like a head and shoulder pattern, and if it breaks below $910, it would mean that we could see a move right up to 850 or lower. So having said that, let us look at the rupee. And last week we've seen the rupee close higher with a gap, and then it sort of made a kind of shooting star on a weekly basis, and it could mean that we are seeing here extended flat, and if we see a top here, in that case the dip could be down to even 46 in the months to come, which basically means that the extended flat dips deeper than the end of A. So we'll leave you with those thoughts this week. Good luck and goodbye.